This is Joe Luczka from KPMG. Good afternoon to everyone. For those of you who might be having a little bit of a hard time hearing me, I apologize. I'm just getting started here with the slide deck. But I wanted to thank you all for joining us today on today's webinar with XBRL US and talking about some of the common errors. What I'd like to do is I'd like to kind of preface this by saying a few things. Over the last couple of quarters and for the last few years, we've been performing agreed upon procedure engagements for a number of our clients and a number of our audit clients as well. And today's slide deck is intended to be kind of a compilation of some of the common issues that we're seeing over the last couple of quarters. And one of the things that I'd like to do is to kind of talk to you a little bit about what we're going to do today and what the intent is. First off, what I'd like to say is that these are in no way any statistical compilation of errors or exceptions that we found in the documents today. What they are, in fact, is simply some anecdotal evidence as to where we're seeing some challenges, where we're seeing some opportunities for improvements, and where we're seeing some opportunities to improve the quality of the XBRL documents. When I was together this slide deck, what I wanted to do was to give people a feel for where we're seeing some of the issues. And when I talk about some of these issues, I'm going to tell you whether we see it as a pervasive problem, whether we see it as an individual problem, or whether we see it as some opportunities where there's a wide disparity of practice and there's an opportunity to improve that. So starting off on slide number 1 here, general observations. What I'd like to start by saying is that the quality of the documents that we've been testing over the last couple of quarters are improving. The documents that we're finding are actually higher quality than what some of the documents that have been submitted in the first couple of years of XBRL. What we're actually seeing is that a lot of the common problems are starting to go away, and there are different issues that we are seeing. Most of the issues, one of 3 things happens. Either a company is moving to a new taxonomy, and because of the new taxonomy, they're having some challenges with looking for new elements to replace existing elements, looking for new elements to replace extensions that they may have used in the past, or dealing with changes in the modeling of the taxonomy. Second, those companies that might use a third-party provider to assist them with their XBRL instance document, we're seeing that there are some situations where a change in a software version may have necessitated a change in the document, a change in the template, or a retagging of the document. And when something like that happens, there could be errors that creep into the process and result in errors in the XBRL. Or there could be changes that are made by a particular vendor that handle something in a different way that are new and unusual for the client and result in additional attention being required. The third time that we see some issues cropping up is when new guidance or new disclosures are being tagged by the client, i.e. perhaps doing a restructuring footnote where they hadn't had one before, new guidance with regards to segments or regards to AOCI, or new accounting guidance if there's a new transaction that would have implemented in the company's portal. What we want to talk about as we're going through this is how to manage the process, how to identify some of these trigger points, how to identify what some of the issues might be, and find ways to head them off at the pass or to deal with them proactively so that they don't result in errors in the XBRL instance document. Flipping to the next page, use of dimensional information. This is an area where we're seeing actually an increase in the number of errors, but it's due in part to a couple things. More conscientious tagging by our clients, better use of dimensional information, better use of members, and being able to tell the story in Excel that you're reporting in your printed financial statement. We have mastered some of the basics of XBRL, but we're working through some of the challenges that have to do with adopting new disclosures, adding mentions, members, and consistent modeling of those. Just to step back for 1 second with regards to dimensions and members. Dimensions and members are used in 3 specific scenarios: to aggregate accounting data, to disaggregate the concepts, or to provide additional information often stated in the printed disclosure. So dimensions and members are used when you may want to break out data by segment or by quarter or by another particular, if you want to call it, quality of data. So something, say, for example, where you have data related to a particular piece of debt or a particular piece of an investment or type of an investment. You may also choose to aggregate it if you are dealing with data points related to one particular acquisition that happened during the year or one particular disposition. Sometimes we also use dimensions in order to break out or to further qualify data. For example, we may be describing the dividend payouts for 4 different quarters, or we may be talking about a subsequent event, or we may be talking about some other unusual type item. Dimensional information adds to the complexity of XBRL, but the taxonomy is fairly robust when it comes to dimensional information, and generally you should not have to extend for axes or domains, but generally you might have to extend for members. As we've been going through the last couple of quarters, we're seeing that companies are becoming more precise in their dimensionalization of their data, which means the data is getting better, it's getting more comparable, and it's getting more consistent. But there are some outliers, and we're going to talk about a couple of those outliers during today's webinar and some opportunities to improve the quality of the dimensionalization in those instance documents. Moving to the next slide, use of dimensional information in members, understanding the concepts of tag once and present multiple times. While generally there has been an improvement in tagging once and presenting multiple times, we are still finding occurrences where data is being tagged more than once in order to most likely achieve rendering objective or in order not to create a problem with the rendering, which may not look much like the printed document or may become more complicated to the face financial statements. There are a number of, particularly in AOCI, where similar data may be tagged with inconsistent elements, i.e., one element is used in the face financial statement, another element may be used in the footnote, so as not to create some rendering issues, or simply because it wasn't fully cognizant that that was a different item. We also find out that the interrelationship of data is very important when we're using dimensional information in members, and that the use of members can help tie different data points together. In certain cases, we have noticed that members are not being used to relate different data points and that extensions are being used. While these generally have improved, they are still an area for improvement. Some of those that we're going to talk about are face statements and footnote disclosures. One of the larger areas, and I just mentioned this a second ago, was AOCI. We have noticed that with regards to the areas of AOCI over the last couple of quarters, we have identified that more than 50% of the documents that we have tested in the December quarter and in the September quarter, and some of the docs also seen in draft form for the March quarter, tend to have some issues with the AOCI and AOCI disclosures. And it's just some new guidance came out from the FASB through one of their implementation guides with regards to AOCI. Several of the software vendors have changed templates or have implemented some new software, which could have resulted in some of the AOCI differences. And clients, when they're tagging their AOCI, may not fully understand the interrelationships between some of the different tags that are presented in taxonomy. While generally we have found that the quality of the AOCI data has improved, we still think that there's some room for improvement there. We encourage all companies to look at the FASB's implementation guide with regards to AOCI and to really understand that section of the taxonomy, to spend some time and to go through the different elements that are available for reclassifications, for adjustments, and the various types we can use dimensions to model the AOCI. We also see that in certain areas, with regards to footnotes that contain condensed consolidated financial statements, variable interest entity disclosures, or quarterly disclosures, that there may be some inconsistencies between the elements or extensions used on the face statements and the elements or extensions that are used in the footnote disclosures. Generally, we would expect that these are areas where dimensionalization should allow us to use the same concepts or the same elements and the same extensions on the face statements and the footnote disclosures if that is appropriate. Moving on to the next slide, what I've done here is I've taken a screenshot of the XBRL US website. And with regards to the consistency suite, you can see that there's a small table here, which is just a cut and paste from the XBRL US website, that identifies the most common errors identified by the consistency suite checker. And you can see that the numbers here are fairly large. However, when you look at the overall population of all the data points that have been tagged and have been reported to the SEC and are included in the IDEA database, the number of problems identified, 2.8 million, is still a fairly low percentage. And various studies have shown that the XBRL data is actually more accurate than some of the data reported by CompuStat and Yahoo and other financial service providers. If you look at the top 10 or the top 12 that I've included here as some of the more common issues, they've been fairly static over the last couple quarters. We have identified some new rules, and XBRL US has programmed those new rules into the consistency suite. And with regards to that, they have seen some improvement and some decline in certain categories. But generally speaking, these are probably the top 10 or 12 most common type errors. Some of these we're going to go through today, and we're going to go through in a very high level. And in some cases, I may give some specific examples of items that we have seen that are consistently or more frequently than most reported incorrectly. Flipping to the next page has to do with invalid access member combinations. Some common areas where we find this problem are in the statement of changes in stockholders' equity, fair value disclosures for debt and investments, the segments footnote. Now, appropriate guidance or guidance is available for these particular areas, specifically in the modeling of the US GAAP taxonomy, and some of the XBRL US best practices and the rule set of the consistency suite, and with the FASB implementation guides. For those of you who were on the FASB webinar last week with regards to the 2014 taxonomy and some of the changes, the FASB is publishing several new implementation guides, including one on stockholders' equity. While we have seen a decrease in the number of errors in the stockholders' equity statement itself, we have identified that there are certain things that consistently seem to be wrong. And those typically have to do with non-controlling interests, dividends, as well as some activity with regards to shares. Now, when you kind of break each one down individually, some of them is due to dimensionalization, some of them is due to a choice of element that is being used to tag a particular fact, and some of it is due to size. So we generally see a higher than normal error rate when it comes to selecting elements or selecting dimensional names with regards to non-controlling interests. One of the other things that we see is that we still have some sign problems in the equity statement, particularly with share counts as they relate to common stock and treasury stock, as well as some stock activity in this statement. We're going to revisit some of the issues with non-controlling interests and some of the issues with negatives later in this webinar. I'd like to flip to the next slide now. Most common error, invalid access member combination, and one that deals with fair value by measurement basis axis. There are two axes, and this is one of them in the US GAAP taxonomy. Here you can see an excerpt from one particular document. And this is representative of several documents that we've seen over the last couple quarters where an estimate of fair value disclosure member has been created. Now, it is normally expected that the fair value would be reported as a domain default. So there is a reported amount fair value disclosure member that would be used to tag the value being reported per carrying amount. However, the value should generally be reported using the fair value disclosure items amount domain default. We should not extend for this particular item. Moving on to the next slide, we're going to jump. And I chose this one to highlight for a couple of reasons. One is that there is some recent guidance released by the FASB, and there is an implementation guide that is available on the FASB.org website with regards to tagging of segments. What we've generally seen, and this is not indicative of any one particular industry, company, or vendor, or client base, but that the segment footnotes have generally been inconsistent we've been trying to work towards getting them consent by adopting the guidance in the FASB implementation guide. However, many companies may tend to roll their segment footnote from period to period and either may not be aware of the implementation guide that is available or have not yet adopted that, either choosing to wait until the next major upgrade or to some disclosures. However, the FASB's guidance in their implementation guide with regard to segment is very important to ensure some comparability between companies and their segment reporting disclosures. One particular thought or one particular approach to this has to deal with the tagging of intercompany eliminations and the creation of a new axis called consolidation items axis and segments axis. And they're not really new, but it's a new implementation of them. I'm not going to go into the whole description of how segments should tag, as that's best left to the implementation guide. But I did want to point out a couple things that we have consistently seen that are not being done in some of the documents that have been submitted to us for review and some of the documents that we looked at independently on the internet. And it has to do with the fact that the intercompany eliminations member has still been sometimes found on the segments axis. The guidance in the implementation guide has asked that the intercompany eliminations be moved to the consolidation items axis and not included on the segments axis going forward. Values disclosed related to the company's operating segments should have an operating segments member on the consolidating items axis and domain. So typically we would expect most segment footnotes to have two axes and two domains. One for consolidation items that would include an op segments member and an intercompany eliminations and possibly a corporate. And another segments axis, which would list the individual reportable segments of the company. Moving to the next slide. When you have disclosures in your segment footnote related to corporate activity, you must first evaluate whether that corporate activity is operating or not operating. If operating activity, first apply the corporate member on the segments axis and domain, and then apply the operating segment member on the consolidation items axis. If non-op member, on the consolidation items axis and domain. It goes into further detail in the FASB implementation guide, and I encourage all of you to review that guide and to determine if your segment disclosures are consistent with the guidance in that guide to help ensure the comparability of that data. Moving on to the next slide, I've just provided a quick overview of a very simple segment disclosure note. And you can see in the yellow highlight where for this one particular company, we suggested some improvement to the segment reporting items and the operating segments member being attached and the intersegment elimination member being moved from the segment axis to the consolidation items axis. Moving to the next slide, common errors, choice of element, usability of data. What I'd like to do here is the XBRL US Best Practice Committee Guidance 1.1.20 on gains and losses of investments. With regards to the 2013 taxonomy, a number of elements had been changed to be durational in nature and no longer instanced. This typically had to do with the category of gains or losses for available for sale securities and holding gains and losses for available for sale securities. Please see the guidance in the XBRL US Best Practices Committee 1.1.20 released in March 8th of 2013 and consider the impact on your financials and any necessary changes. On an XBRL from last week, where we went over some best practice guidance and some use of the Consistency Suite tool, I had the good nature to present some information there and some ways to use the Consistency Suite tool to identify issues in our documents, use it to compare one document to another, and to identify or mine some data in the XBRL US database. And one of the routines that I had run was to look for the existing element 2013 taxonomy with regards to gains or losses on investments, typically available for sale investments, and to look at some of the extensions that were recommended to be created by XBRL US Best Practices Committee. With that, we can then see some modeling and see who has adopted the new guidance and who has not adopted the new guidance. In looking at that, you can see various benefits of tagging it using the existing tags and tagging it using the best practice guidance. Here's an area that we see that companies should, while they're using the 2013 taxonomy, implement some of the best practice guidance to ensure consistency and the usability of the data. These changes were made and these extensions were promoted or suggested so that companies who intend to mine the data could most effectively use the data by being consistent with the naming of the extension and consistent with the use of either an instant or a duration on those particular disclosures. Moving to the next, common errors, choice of elements impacts rendering. Dividends is used to tag the reported facts, dividends to non-controlling interests. Earlier, I had mentioned some issues with the statement of changes in stockholders' equity. One that we see commonly reported is that dividends is used to report the fact dividends to non-controlling interests. This is actually not correct from an accounting disclosure standpoint. There are a number of elements in the U.S. GAAP taxonomy that are more appropriate for the disclosure of dividends to non-controlling interests. There are individual elements specific for the various changes in NCI. Moving to the next slide. I've taken an excerpt from the U.S. GAAP text, broken out non-controlling interest items, and you can see that there are a variety. Increases to NCI relating to subsidiary equity issuance, increases related to sale of parent equity interest, decreases related to business combinations, and decreases as well due to distributions or redemptions. This is probably one of the more common issues that we see that is related to a choice of tagging or a choice of element on the statement of changes in stockholders' equity. I encourage everybody out there to get to know the U.S. GAAP taxonomy, to understand what elements are available and what elements might be more appropriate or suited for their particular disclosures. One common discussion point that I have with clients has to do with the fact that if we were to use one of these elements, it would appear differently and cause the rendering to look different in the financial statements for the statement of change of stockholders' equity. On an overall basis, the SEC has said, and it's in the disclosures, that rendering is not as important as the appropriate tagging of the data. And as you can see it moving to the next slide, I have a phrase here, tag the data, not the presentation. Many companies are concerned and actually may in fact use extensions or may in fact use different U.S. GAAP elements or may in fact use incorrect U.S. GAAP elements with the intent of trying to get their face financial statements consistent with the printed financial statements in their 10Q or 10K document. This causes some errors, consumption of the XBRL, when two facts may actually be tagged using two different elements when they should in fact be using the same element, or when an extension is created because a particular U.S. GAAP element is used in another statement or in another footnote. There are a number of other situations similar to NCI which impact the statement of changes in stockholders' equity. In last week's FASB webinar, the FASB mentioned that they were developing an implementation guide with regards to stockholders' equity. When that implementation guide is released to the public in the near future, I encourage everyone to take a look at that implementation guide to understand the concepts being proposed in that and to understand how that might impact their particular financial statements. In looking at the statement of changes in stockholders' equity, there are a number of opportunities to improve the comparability. Following this new implementation guide will help clear up some of the misconceptions and clear up some of the tagging so that comparability actions will be improved. Moving to the next common errors, negative values. Negative values continue to be a problem with the U.S. GAAP taxonomy and its implementation in the SEC filings. While success with regards to negative value has improved and more companies are getting their tagging correct, and the number of tags that are incorrectly tagged as negatives is decreasing, it still maintains or it still remains a more significant issue. I would encourage you to pay close attention to the modeling in the US GAAP taxonomy and to be consistent with the taxonomy. The taxonomy takes precedence over the presentation. In a number of situations, I teach XBRL, either to our clients, to our people internally, or with a variety of XBRL US events. I like to think of the process of evaluating negative values as a two-step process. First is reporting with the correct sign, and second is properly using negating labels to conform to the presentation when necessary. In December of 2013, the AICPA released an XBRL update on negative values to help with the decision-making process. It's called Getting Your Signed Values Correct in XBRL Files. I encourage you all, if you haven't already taken a look at it, to take a look at this AICPA update booklet and to review the guidance in there to help you improve the quality of your negative values. Moving on to the next slide, I'm going to just delve very quickly into some of the guidance in the AICPA's XBRL update on negative values to consider one-way elements versus two-way elements. We still see a lot of one-way elements being tagged with negative values. Generally speaking, one-way elements are elements such as purchase of property, plant, and equipment, payments of debt, gain or loss, actually gain or loss would be a two-way element, depreciation expense on the P&L, which also appears on the cash flow statement. So these one-way elements are generally expected to be positive values only. Two-way elements may either have a positive value or a negative value. We generally, see these are improving in quality, but still see a variety of one-way elements on the cash flow statement and the certain footnote disclosures that are tagged with negative values. The second area is to consider how it is modeled in the taxonomy. It is not always clearly evident in the taxonomy whether something is modeled from the balance sheet perspective or from the P&L perspective, or if it's a cash flow particular item. We encourage you to base your decision on the documentation label over and above the concept name or the standard label. The documentation label should assist you with understanding how that particular element is intended to be used, which should then provide you guidance on whether it should be a debit on the P&L or a credit on the P&L, or how it might be used in a balance sheet roll forward. Moving to the next slide, and continuing on about negative values, one frequent company presentation of restructuring costs. And this is not the one and only one area where we see issues with negative signs, but it's one that I chose to highlight in this particular webinar as it relates to signs and something that may in fact be a one-way tag that is modeled in one particular way, but could be dented in multiple ways in your financial statements. Some of the same elements are used in multiple disclosures, such as the P&L or the cash flow statement, and may also be used in a balance sheet reserve roll forward. The AICPA update will go into more detail as to how to identify some of these issues and how to basically understand from what direction are they modeled and how they should be tagged and how they should be presented. But I wanted to go through two particular ones on the next slide that are often mistagged and that we find in a number of different documents. One is restructuring charges. In the US GAAP taxonomy, this element has a debit balance type as it's modeled after the income statement, but may also be used in the roll forward. In the income statement, we would expect this to be a debit as it will report an expense in the income statement. If this was to be its own element that is used in a balance sheet roll forward of the restructuring charge reserve, we would expect it to have a credit balance. However, the same element is used in both reporting disclosures as a debit on the P&L, and it would be tagged as a debit in the balance sheet reserve roll forward. This may necessitate the use of a negating label. Payments for restructuring is also similar. Payments for restructuring is something we would expect to use on a cash flow statement. It's typically a positive value because it has a credit balance type. It is a use of cash. But it could also be used in the roll forward of the restructuring reserve. And in that case, it might be a debit in the financial statements. However, because we're using the same element, it would still be a credit balance type with a positive value and may in fact need a negating label. away element and should be tagged as positive values. Consider whether negating labels are needed for the presentation. Moving on to the next slide, calculation relationships. Occasionally, we still do see calculation relationships with issues. Generally speaking, calculation relationships have improved. However, we still see some problems with them, and it may result from items being added.
It's Michelle, but I'm not sure which slide we're on.
Hello? We are on the slide for calculation relationships.
Calculation relationships, which is, do you know what slide number that is?
Yes. I do not have the number. 1 second, please. And let me just, ladies and gentlemen, I apologize for the confusion. We are on slide number 21, calculation relationships. Generally speaking, we have seen improvement in the use of calculation relationships in instance documents. In the beginning, we saw a large number of documents that did not have calculation relationships built for the various disclosures. What we are seeing lately is that the calculation relationships have kind of gone through a phase, that they were built correctly, but now as documents are changing over time, as new elements are being added to various either face disclosures or footnote disclosures, from time to time these calculation relationships fall out of compliance. And it may happen when an element is added to an existing relationship for a new disclosure or a new line item in the current period, and the weighting may be backwards. The value has been tagged with a sign backwards in order to make the calculation inconsistency go away. In this case, two wrongs don't make a right. While we have, again, seen an improvement in the use of calculation relationships, we're still seeing that from time to time, something may get missed, and clients do not necessarily have the software that allows them to easily understand when a calculation relationship falls out of compliance or when an issue develops with one of them. Calculation relationships are important not just because they can be used to check the values in the document, but also because they can be used to explain the relationships between one data point and another data point. Calculation relationships within an instance document may help someone understand how one item is either added to or subtracted to another item, how two items may in fact relate to each other, or how that calculation is intended to be corrected or be checked in an instance document. Some of these have to do with, say, for example, debt, where the calculation may take short-term debt plus long-term debt and sum it to equal total debt. That is an effective control to ensure that your elements are tagged with the correct values and the correct sign when it is working correctly. Moving on to slide number 22, again, something that we still see a fair amount of, but is generally decreased from past filings, has to do with scale and scale of values with regard to the paper presentation. We have seen some occurrences, and it's typically maybe in each document from quarter to quarter, where values may be tagged as, say, 0.9 as opposed to 900,000. Or values may be tagged as 2.5 million shares versus 2,500,000. Sometimes this happens when an existing document is correct, but new facts are added during a particular document or a particular Q or K. And someone who may not have been involved in the original setup, but has been brought in to help with the maintenance, or simply forgetting some of the values and some of the rules with regards to entering values. So occasionally we do see some scale issues. It is still fairly common to see some of these. However, over time, it has become easier to find these and easier to review and to catch them. So we encourage everyone to go through their documents and to ensure that policies exist for the proper tagging of values, the proper tagging of shares, and the proper use of units. Moving on to the next slide, we're going to talk about units just this very quickly. Again, we saw a larger number of unit errors in the first couple of years. Companies seem to have understood units and understood the implementation of the XBRL International Units Registry. We're seeing a lot more consistency with the adoption of the Units Registry, particularly with regards to certain disclosures such as oil and gas and extractive industries, where we deal with millions or billions of gallons, where we deal with cubic feet, and certain other flow versus volume type of disclosures. However, because of the complexity of those, there are a variety of different tags to be used, and there's still an opportunity for errors. We also see some issues continuing to come about with the use of durational item types. Durational item types were introduced to help describe things such as 5 years for the term of stock options, or 3 years for the depreciable life of fixed assets. Durational items generally do not have unit types because they are entered in the format of P3Y or P5Y, so they would specifically dictate years, months, days, or some other measure. So these generally would not have units. We still encourage companies to go through their instance documents and determine whether or not they're compliant with regards to units. If we don't have the units right, it becomes very difficult to compare the data from one document to another. Moving on to the next slide. We've kind of talked about some of the more common errors and some of the problems that we see in a more general format. And I tried not to highlight specific tasks or specific types of errors, but to more commonly talk about what are some of the categories. And those categories are the use of dimension, the proper use of members, the proper use of domains and axes, choosing not to extend domains and axes because the taxonomy is fairly robust and it is not expected that you would have to extend for domains and axes, and following through some of the choice of the elements. And again, making sure that when we consider the elements in the US GAAP taxonomy, we do not choose elements or create extensions so as to force a desired rendering output or to eliminate the use of dimensions in a particular table to make its rendering look better or to make its tagging a little bit easier. Now that we've identified some of these areas, and I still encourage you to go back to the XBRL US website to print off the list of common errors from the consistency suite and to compare those types of errors to your instance document to see if any of those are present in the documents that you've been filing or intend to file in the near future. There are several resources available to you, and I mentioned some of the FASB implementation guides. If you go to the FASB.org website, there are some archived slides from last week's webinar. And attached to those slides, you will see some documentation about which implementation guides are currently available and which implementation guides are due out shortly, including the one that I mentioned on stockholders' equity. Between those, the one on segments and the one on AOCI, you will address significantly most of the issues that we continue to find in instance documents from the December quarter and the September 2013 quarter. Those are where we've seen the most challenges and the most issues, and we encourage you to start your review in those areas. We also would direct your attention to the FASB taxonomy architecture for documents and webinars. There are documents in there that explain what elements have been deprecated, what elements have been changed, and generally how they should be used. The FASB webinar from last week, which talked about the 2014 taxonomy, as well as the webinars that are retained on the XBRL US website on the left-hand side underneath the menu item there, are available for your use to help you understand where some of the sticking points are. I would also encourage you to go back to the FAQs and staff interpretation. While they are somewhat older and haven't been updated, they are still very relevant as they talk about some of the concepts that continue to present some problems in today's document. Also, just looking back, I've also mentioned the U.S. Best Practices Committee recommendations, the results of the consistency suite, and there are a variety of third-party software tools that will help you more specifically identify some of the issues. In this webinar, I did not want to pick on particular elements. However, what I did want to do was to give you a general understanding of where we're finding some of these issues. These are some of the tools that will help you review your document. One particular thought that you may wish to take on is to read the Statement of Position 13-2 from the AICPA. While it is titled Performing Agreed Upon Procedures Engagements that address the completeness, mapping, consistency, and structure of XBRL formatted information, it's not solely for the use of third-party accounting firms who might be performing agreed upon procedures, but can also be used by companies as a checklist to help them ensure the accuracy or improve the accuracy of their XBRL instance document. So the list of 52 procedures that are included in that document could become part of a quarterly or an annual review program for a company's XBRL document. Some of those procedures may be performed by your vendor. Some of those procedures could be performed by your financial reporting department. Some of those procedures could be performed by internal audit should they choose to assist you in your XBRL process review. But having looked at those 52 procedures, those have been identified by some people in the industry as being the things that could go wrong in an XBRL instance document. And if you review your XBRL instance document in light of those procedures, it may assist you with catching some errors, and it may assist you with improving the quality of your document such that it is most comparable and most accurate for your SEC reporting. And that brings it to close my presentation for today. If there are any questions, I would be happy to take them. And please feel free to send them through the chat room over to Michelle. I unfortunately have lost my internet access, the wonders of technology in XBRL. But if Michelle would like to raise any questions, I'd be happy to answer them at this time.
Joe, thanks very much. We did get one question from the group, from several people actually, which was about getting access to the slides. And yes, we will be sending the slides to everyone tomorrow morning, along with a replay of the program. I don't believe we had any other specific questions, but I'm going to give an opportunity for people to post their questions right now by using the moderated chat window on the bottom of your screen. And while we're waiting for questions to come in, I'm going to cover a few points related to XBRL US events and other programs that we have coming up that may also be of interest in addition to this program. We do have a couple of in-person events, and I want to draw your attention to a one-day workshop that we're holding in Orlando, Florida on June 12th. And Joe will be speaking at that program. And we're calling this XBRL Essentials for SEC Filers. It's offering 9 CPE credits. And we're offering anyone who registered for the event today has an opportunity to take advantage of a 10% discount on that program. So it's coming up in just a couple of months, and it's going to be a jam-packed day that's going to be very worth your while. So we'll be sending information out about that tomorrow in the email that we send along with the replay and the slides. Another event that may be of interest on the West Coast is going to be a 2.5-day conference in Bellevue, Washington. This is actually a national conference, and it takes place September 15th through 17th. And again, that's going to be a very, a great conference. We want to thank our sponsors, PwC, Deloitte, and Parenti Beard, for sponsoring that program and helping us make it happen. So those are 2 in-person events that we want to encourage you to consider attending. We're also going to send you tomorrow a link to a 3-minute survey, and the purpose of this survey is really to collect information on topics and subjects that are of interest to you, and training programs that are of interest to you, specifically for the national conference. So we encourage you to click on that link. It's obviously free to do so, and in fact we're offering a free registration to our Washington State conference in Bellevue, or 3 chances to win a $10 Starbucks gift certificate. So, please take that survey and tell us what you think, because we like to make sure that our programs are relevant and useful for people. And then the last thing I wanted to mention is that our certificate program is ongoing. It's been finalized. It's a certificate program that offers 40 CPE hours of credit, and it's again jam-packed with lots of information on the fundamentals of US GAAP reporting. It includes statements and footnotes, and I'll send information out about that as well. And now I believe we have a couple of questions here for Joe in our remaining minutes. Joe, when would infinite be used for a decimal?
The infinite decimal setting is actually quite helpful in a variety of cases. If you have something that, say, might be earnings per share and it was $2.52, that's almost always going to be a 2 decimal place reported value. But when you have something that, say, for example, may be interest rate on a debt, and on some debt it may be 2.5%, it could be 3.48%, or it could be 4.125%. Use of the setting infinite allows the software to say, I will take what has been input and report that value. So it neither truncates nor reports too many digits. So it's typically useful in something where either the number of decimals may change from period to period, or it may change from dimensional item to dimensional item, i.e. like a debt rate. So that's typically where it's most used for, but infinite is somewhat helpful if your number of decimal places will change.
Great, thank you, Joe. Okay, and actually, I don't see any more questions coming in right now, so we'll give everybody back about 9 minutes of their time. But Joe, you did a great job as always. Thank you very much for joining us today. To all of our participants. And again, watch for the email tomorrow about some special offers on our event in Orlando, our 3-minute survey, and some other programs that may be of interest. So thanks very much.
All right, thank you all, and I wish everybody a good day.